All right, guys, so we've got Nick Shawn here on the Trading Nut YouTube channel. We've just recorded an absolutely unbelievable second podcast with Nick, who was on the Trading Nut podcast back in episode 7, and he's changed everything, well, not everything, but he's changed a lot of what he does, and we get a very detailed view of exactly how that works in the audio version. But we've jumped on here quickly to have a look at Nick walk us through one of his charts and a couple of the trades that he's taken recently, and you'll learn a bit more about what he's done, or what he's talked about in the Trading Up podcast, and also how he trades. So, Nick, welcome back to the YouTube channel, and let's get on with this little example.
Hey, absolutely. So right here on my chart, we have gold right here, and this is a trade I took last week. To keep things simple, I'm going to show you guys one trade I took on gold last week. It's a divergence trade, and then I'm going to show you one trade I took on USDCHF, which is a price action based trade. That way that you guys have a little bit of a visual example to see how I take these trades. And these are actual trades I took on my personal account, and I called these out. So here's the gold trade. So first thing we're going to do, since this is a divergence trade, we're just going to pull up a 14-period relative strength index. That's what I use to do divergence with. And then also here, as you can see, I'm starting on the daily chart. And what have I done? All I've done is I've just marked up the most obvious significant levels. So we can see right up here, this is an area of clear price interaction. Price respected this level as resistance, then support right here, then resistance again. So you can bet that if price comes back up to this level in the future, it's probably going to interact at that level just because it's so clear. Levels like this could be a little bit harder to identify because that's support, but it slashes through right here, tries to get above, slashes through right there. Stuff that's too confusing like that, I just delete off the chart. So that's the first thing. The second one, this is kind of another level I drew in here, which is resistance here, support, broke below, tested as clear resistance, broke above, and then snap below. So for this, to me, this is a clear level. And then also I've just highlighted my extreme lows down in here. So that being said, after I've drawn up my extreme levels on the daily and just very obvious support resistance levels, I go to the H4 and I look for divergence, okay? So like I said, this is a trade that happened last week. I called this trade Sunday night. Today's Friday, so Sunday night, or I think it was Monday morning, whichever one. But here is what happened. So on gold right here, as you can see, price made this massive move down and then came down a little bit lower. So I'm going to adjust my chart to make this as clear as possible. And if you look right here, this was a divergent move. So gold made a low and then a lower low. So I'm just gonna highlight this on the chart so you guys can see this. Low and then a lower low. While on the RSI window, gold made a low right here and then a higher low. So that right there, that's all divergence is. It's just a low, lower low in the main chart with a low and a higher low on the RSI window. So that's where I entered my first buy. So this is how it works. As you guys remember, I talked about scaling in. I entered a buy right there, and I just had my target at this next significant daily level. That's where I set my targets because it's probably likely that price will reverse there in the past. So if you notice, this move did not happen. It went into profit for a little bit, but then it came back down even more. So what happened here? Price extended all the way down in here, but if you look at the RSI window, this low is still divergent. So what these are, they're just a series of divergent lows. So instead of getting stopped out and losing a trade, as you guys know, you don't use stop losses with divergence trades. This right here, that's where I entered a second position because it had made a new low and it was still divergent. So I entered a second position right here. So I had these two trades open like that, both with targets right here. So what happened after that? Price went and it went quickly to the target right after that next move right in there. For this one, it didn't close all the way to 170 pips. I closed slightly early at about 150 pips on that second entry, but it worked out very well. And what are we doing? Let's go back just to keep things simple. We're drawing up significant levels on our daily chart and also the extreme lows, extreme highs, stuff like that. And then you're going to the H4 chart and all you're doing is you're just looking for RSI divergence. That is it. RSI divergence down to extreme highs or lows or significant support resistance areas. That's all you're doing. So the second type of trade I took here was on USDCHF, and like as usual, I started on the daily. We don't need RSI for this, so I'll just take that off. But if you look right here, I've just drawn up the most clear levels I could find. Stuff like all this down in here doesn't really matter because it's so far in the past. We're looking at what's happening in the moment, so I just keep my levels very, very simple. So if you noticed, I did draw a resistance level right here because we had an extreme high there, and also try to test the support twice. So what happened is before this had happened, price was just breaking through this level. And what I said is hey guys, wait for price to come back into this level And if you see clear rejection at that level, that's a very clear resistance level, and it's also respected as a very clear support level. It's probably going to respect it as resistance if we can get a price up in there. So what happened is, lo and behold, if we go down to the H4 time frame, we can see that price broke this level, came up, started showing bearish price action and rejecting it. So I actually got my entry right in here. The stop was just above the level, and the target was down here at this next significant level, and it had at least a 1 to 3 risk reward. This is a little bit higher. Mine, the trade that I took, it actually had exactly a 1 to 3 risk reward where my stop was, but essentially you're putting your stop just above the level and your target significantly lower. Now, why did my target go right there? Very simple. On the daily chart, that's an area of price interaction. So we have it as support here, resistance here. You could even draw it like that. Support, support, and then it comes over here and kind of plays around a bit. But this was the most obvious area. In addition to that, price was also in an uptrend. And so I know for sure I don't want to be holding in my sells past that uptrend. So it's a little bit safer to take profits a little bit higher as long as you can still get good risk reward. But this is how I took that price action trades. Both of these trades this week, I actually took on my personal accounts and actually called those out as well for students to see, just because they can see really well and learn a lot of stuff live trading. So that being said, those are the two trades I took this week, and I hope these examples kind of help you put together what me and Cam talked about in the trading podcast. So that being said, thank you guys so much for watching. This was Nick.
Cool, brilliant. Well, look, thank you very much, Nick. That really does help paint the picture for the guys that have A, heard the podcast, and B, wanted to learn a little bit more about what you do and how you approach this. But I know there's a ton more to it as well. And there might be something that we link up below in the future. So just keep an eye out for that, guys, or we might even edit this video so that it's in here as well. But look, if you do want to find out a bit more about this, well, in actual fact, you want to find a lot more about what Nick is doing here and how he approaches this, then I do recommend taking a listen to the podcast, which we'll link up below as well. And you'll find out not just how he takes these trades, but the unique risk strategy that he uses around them as well. So, Nick, once again, thank you very much for coming on the show. It's been a pleasure having you back on the show. I hope the Memorial weekend goes well for you, and it would be great to get you back on here sometime in the future again.
Same to you, Cam. I had a lot of fun. I'll chat with you soon.